laser pointer 你要指啊。
Okay.
Hi everyone, thanks for joining the call today. Just give everyone a minute so everyone is fully dialed in. Okay, a very good afternoon to everyone and welcome to T7 Global's Q2 briefing. I'm Jason Chew from Image Jiwa Communications and we are the IR and PR consultant for T7. And I shall be your moderator for today's briefing. So today's results briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagement and with the investment community. So for the first phase of the project, Image Jiwa Communications has been appointed as the IR company to train, educate participating PLCs to conduct effective IR engagements. The selected companies for this program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. So we wish to thank T7 for participating in this project. The recording of the investor briefing and presentation slides will be made available for all Bursa Malaysia Institutional Insights portal after the event. So just a quick introduction. Today we have Tan Kay Jin, Group Chief Operating Officer, Tan Kevin, Executive Director. I think on the side, we also have Mr. Ong, Group CFO, and Sean, the Manager of Corporate Affairs. For today, Kay Jin will bring us through the presentation slides. Q&A session will be after the presentation, so do keep your questions till after. So without further ado, I'll pass it over to Kay Jin.
Hi, good afternoon, everybody. My name is Jim Tan. I'm the Group Chief Operating Officer of T7 Global. How everyone is doing well today. Today, I'm going to talk about the second quarter results for T7 Global. I believe everyone is aware of our company. And to keep it simple, I've done a few introduction slides on ourselves. We are on the main market of Bursa Malaysia, energy, aerospace, and construction solutions provider. Yeah, that is our core businesses of T7 Global. Founded in 1990, 30 years of oil and gas experience, mainly, and order book of 2.2 billion as of today. Our employees are around 400 to 450 employees, and the market cap was 242 million as of 25th August. Okay, this is on the overall of our capabilities in terms of each business division that we have. In energy, we have oil and gas. Oil and gas in the EPC segment, where we engineer and construct mobile offshore production units. Operations and maintenance, where we are in the topside maintenance, hookup and commissioning for brownfield assets. Offshore construction services in the areas of subsea, diving intervention, underwater inspection. Integrated well services for well workover and P&A, P&A meaning abandonment of wells. Specialist product technology, where we work with foreign principals to bring in their products and services into the country, and manpower solutions. Okay, for the aerospace business division, we have the metal surface treatment plant, where we're situated in Serenda, doing all kinds of chemical treatment, surface treatment of all metal flying parts. Okay, ranging from chemical processing, NDT, painting, part marking, etc. For our defense, we are mainly focusing in the marine services, marines for Navy and commercial ships, either in their maintenance and also in some cases we provide the bridge systems and combat management systems to their naval assets. For the construction, we are more, we target specialized facilities, such as some of you may know the Endau Fish Processing Park, and also the custom cargo scanners around Malaysia. These are the type of projects that we go through, and we are a bit selective in the area of construction. Okay, the financial highlights for us. As you can see, we have achieved 53 million for second quarter this year. Compared to the previous quarter, it's a slight decrease of 2.3%. Second quarter last year. However, there's an increase in PATAMI, mainly due to the 8% revenue growth, coupled with higher PATAMI margin achieved during the financial period under review. And the higher PATAMI is mainly as a result of a better project management approach and also cost management in terms of utilizing better contractors and also identifying better supply chain in our oil and gas businesses. Okay. And the revenue compared to the first quarter this year has slightly dropped due to our clients' utilization of our services. But in fact, most of our services are in milestones completion. So milestone completion, like we have, is similar to the trends of our previous years, where we will highly concentrate in third quarter and fourth quarter this year also. So for the PATAMI margin, we have increased from 2.5 to 5% as of second quarter 2022. Okay. This is a financial snapshot of T7 Global. Our total assets standing at 849.8 million. Total equity at 271.3 million. Total liabilities 578.5 million. 37 cents net asset per share, and 1.5 times net gearing ratio. And this net gearing ratio is, we still have the same situation that we are facing now, because we are currently funding our MOPU for the buy MOPU. We will maintain this gearing ratio. We will try to maintain this gearing ratio moving forward, and then as buy MOPU is getting started this year, we will be looking at paring down the gearing ratio in due time. Okay, this is something about Bayan. As you can see, the picture now is a completed MOPU currently in China. A bit of a brief about the project. It took us approximately 2 years to build this MOPU, and now it's ready. It's due for sail away of 10 days from China to Sarawak. And then from that point onwards, after hooking up the MOPU at field, we're looking at commissioning and first gas towards the fourth quarter. Okay, and upon first gas will be the leasing, operating, and maintenance contract will kickstart, and then we will be running on a charter rate basis for the next 10 years. As you can see, these are the opportunities that we have and where we are in terms of the supply chain of PETRONAS in the upstream sector. We are in the hookup, commissioning, and maintenance, construction, modification sectors. We can see the man hours and also utilization predicted by PETRONAS especially for 2022 is especially high. We'll be looking at a better results in the coming quarters. Okay, As for the integrated well services sector, we gauge ourselves based on the expected wells to be decommissioned by PETRONAS. As you know, back in 2021, we had Pulai. Pulai was 5 wells. So out of the 13 wells completed in 2021, we completed 5. So in 2022, we are executing our second IWS project, which is the M3 plug and abandonment. This one is, we are currently doing 10 wells. So in 2022, we are doing 10 out of 31 wells that they are expected to do. Okay, moving forward, obviously we are going to secure more work orders within the umbrella contract of integrated well services coming from PETRONAS. So I anticipate that it's going to be, we will have a few the same share market in terms of the wells to be allocated to T7. Okay. Okay. One of our major prospect for the group is obviously the MOPU. I explained before, MOPU is being commissioned this year. We'll be looking at other potential projects within the region. We confine our pipeline to Southeast Asia to be conservative, and we are looking at the nearest opportunity being in the Gulf area, especially within Malaysia, Thailand. Okay, our target is still the same. We remain to secure one major contract in every 24 months. Okay. So this is our future plan. Our future plan hasn't changed from the last briefing we have done. We aim to build a sustainable base of assets, energy assets, especially. It can be a MOPU, can be a new assets that's gonna support our services that we undertake. And also we're gonna partner with global OEMs to introduce new technology and new ways of automated solutions to the way we do things. And of course, we'll be driving the ESG initiatives in our production assets, such as the MOPU, to cut down on emissions and also looking into renewable energy. Okay, for the aerospace defense, we're looking at maximizing utilization rate of the treatment plant and venture into other sectors. In fact, we are currently working with clients that is non-aerospace for the treatment of any metal parts and assembly. Okay, for the construction, we are looking at high value infrastructure projects. So high value in the sense that we incorporate digital solutions or automated solutions into the construction projects. Okay, we'll be looking at green building infrastructure projects for immediately within the region. Okay, our ESG framework, we are looking at 4 based on the UNFP SDG, which is 8, 14, 3, and 5. These are more relevant to our offshore businesses, especially we being an upstream company in the offshore environment. We're looking at sustainability and also the ecosystem of the marine life in where we operate in. That is a short brief of our results and what we are doing moving forward. So I hope that everyone understand where we are and we got the picture.
Okay, thanks, Jim. Kejin, for the insightful presentation. We'll now open the floor for Q&A. You may unmute yourself to post your questions or type your questions in the chat box and we'll read it out.
Hi, this is Sean from IHB. I just have one question regarding your revenue recognition, right? I mean, if I look at the past last year itself, you know, it seems like is usually backloaded in the second half of the year. May I know why is that so, and are we seeing also a similar trend this year itself?
Yes, it will be the same for this year because of the type of clients we have. Our revenue now is without the MOPU, as I've explained before. The MOPU only kicks in towards the end of this year onwards. So our revenue is basically driven by the MCM contracts, so the maintenance, construction, and modification contracts, which in our side we call it topside maintenance. So it is based on the shutdown and turnarounds that our client has determined. For our Thai clients, such as Hibiscus for the Peninsula asset and Charigali has for the Thailand, Malaysia asset, their turnarounds happen from June onwards. So that's where we see the higher upside that's going to happen for the next the second half of the year.
I see, but I mean, I'm just trying to gauge, because I thought usually in the fourth quarter is the monsoon seasons whereby the maintenance activities are also kind of on the low side. So I'm just wondering why, how is that even at fourth quarter you can execute most of the maintenance projects for your clients during the monsoon season?
I understand, because if it happens in June, so it's going to take either 1 month, 2 months. So after that, you'll be looking at invoicing a bit later, not exactly during the same period of time.
So you mean the work will be executed earlier and the billing will be done in the fourth quarter? Is that how I...
The billing will be done, for example, the billing will be done, I would say, 14 days after work completion. So that one is a factor that we have to consider. And then the work is normally billed in a lump sum basis. Yeah.
So the work itself, is it done in the fourth quarter during the monsoon, or it is done earlier and it's actually billed on during the monsoon?
It is done earlier and billed later.
Okay.
And due to the process, especially now, it runs on what do you call it, a group procurement software. So a lot of complications in terms of invoicing. That is why whenever the work is being done in third quarter, it normally takes 1 or 2 months to get approved and paid.
And in terms of based on what you have, work orders that you currently have already received, is that possible to do a year-on-year growth in terms of in the second half of second half this year?
Yes, in fact, as you can see, the PATAMI has increased from 2 to 3% to 5%. So we'll be looking at maintaining that momentum moving forward.
So second half also the revenue should be higher than the second half of last year, right? Is that what we can expect?
Optimistically, yes.
Okay. And in terms of your maybe what is the margin? Is there any margin pressure because of rising cost material or the labor shortages that some of the players are experiencing?
If I say yes, I'll be lying. If I say no, I'll be lying. Of course, there's some factors that affected us, that is going to affect us on the bottom line due to the escalation of prices for materials and manpower. But we are quite optimistic for this year. That I can say.
Okay, thanks.
Yeah, maybe we can take some questions from the chat. So the first question is, what's the exact first gas date for the MOPU? And based on the current schedule, can the MOPU make it to be installed before the monsoon period?
That is our intention. We are looking at completion and first gas by, I would say, no later than November.
Okay. So for the future floater projects you plan to secure every 2 years, do you need to raise any more private placements or right issue? Or you have identified other ways to raise the funds?
Raising private placement and all that is definitely is one of the options. But what we are looking at, because we are not relying on the MOPU business alone, as you can see, the revenue we generated over the past few years are not from the MOPU. So we do have cash flow within the group from our other services, and we'll be looking at capital recycling within the group.
Okay. Okay, so moving on to the next question. What's the split between the energy, aerospace, and infra in terms of revenue, in percentage terms? And then how big will you envision your aerospace to be like going forward in the 3 to 5 years timeline?
Okay, now I would say the split is still very much leaning towards the energy business. So the oil and gas business will take a fair share of the revenue. It's a main contributor.
Yep.
Moving forward, we do look forward to boosting up the aerospace division to help out with the contribution of the revenue.
Okay, any size you're looking at?
Any size? At the end of the day, we want to maintain, I think previously I mentioned before, we want to maintain a 70-30 in the immediate,
okay.
in the next couple of years.
Okay, got it. So the next question is on aerospace as well. Have you attained any certification on aerospace work?
Yes, in fact, the basic certification to start the business, for example, the regulators, the associations that we need to be affiliated with, NetCap, ISO, all those we have done. The continuous process that we're doing now is getting more and more customer approvals. As you know, aerospace is quite similar to oil and gas. Customer approvals are very important. We have a major customers such as Spirit Aerospace, Boeing. So next, I think one of the next steps we are looking at is to get Airbus approval. So once the customer approves that has already been approved, that means we are automatically registered in their supply chain. And whichever, whether directly from them or their first tier or second tier contractors are able to use our services, are able to engage us. In fact, we are currently looking at servicing Boeing more for the moving forward.
Okay, great. Okay, just jumping back to the oil and gas segment, right? Is PETRONAS still, because you mentioned about procurement filling, right? Mm-hmm. Is PETRONAS still using tedious clutter procurement submission system? Or are there plans for both PETRONAS and the whole supply chain to move towards maybe SAP, Oracle, or Ariba model?
I think they moved to a system they call it GEP. I think it's one of the model they mentioned. They already decided on one for the whole PETRONAS. So the one, to be honest, it started a few years ago. I think 2 years ago, if I remember. That one, it is going well, but I wouldn't say it's perfect because sometimes invoice rejection is still occurs. So that is the little hiccups that we are experiencing.
Okay, I'm sure nothing too big. Okay, a bit of financials part. Your working capital is quite lumpy. What is the plans to improve your cash flows?
I think as the MOPU comes online and starts contributing to our cash flow, we will be looking at a more stable working capital. And also MOPU being a fixed TCR and quite significant contributor to revenue and bottom line. MOPU is our cash cow, so I think with that coming online, we should be more comfortable.
Okay. Currently, we do not have any questions in the chat. If anyone has more questions, feel free to ask away.
Hi, Azim here from BNB Securities. Yesterday, Balestier announced they won the plot and abandonment for Tembugo. So
Yes.
may I know whether you bid for this, and what do you think the landscape moving forward?
Okay. Okay. Since you talk about IWS becomes the idea of IWS is integrated services. So integrated services in the area of wells. So in how you service the wells, either you do a workover or you do an intervention, or you are closing up the well. So closing up the well, you're cementing the well, you're abandoning the well. So in the Tembugo case, the integrated services was only limited to the workover. So in our case for T7, we are integrated in the sense that we take on the marine spread as well. For Balestier case, is without the marine spread. So it is something that Petronas has chosen to award them with. As you can see, for our previous job with Sharigali is Pulai and M3, they are both awarded with the marine spread. So maybe Petronas is looking at cost optimization, or they want to handle the marine spread on their own. That is why we still got it without the marine spread.
Sorry, I don't really understand about the marine spread. What's that? Can you explain?
Marine spread. So integrated services is normally you take on the whole responsibility of the projects. For example, you'll be engaging your own logistics, your own accommodation, your own mainly logistics and supply chain. Everything's under you. In our case, yes, our previous the two projects are such concept, but the Tembugo, how they awarded Balestier is they have taken up the logistics portion. So all the vessel arrangement is being done by Petronas. That is why the contract value, you can see, if with vessel, it will be a different kind of contract mechanism and value. Yeah.
I see. Okay.
Yeah.
Thank you.
No problem.
Okay, Jun, can you just elaborate a bit on your tender book?
Our tender book, I think in total we are tendering around 2.5 billion worth of works. Around 1.5 belongs to the oil and gas tender book, and the remaining being the construction aerospace. So the 1.5 billion, it mainly consists of major tenders such as MOPU provision. So that is why we are actively looking for more pipelines for the MOPU business. And if we have anything exciting to announce, we'll be coming back to you guys in near future.
Okay, thank you for the answer.
Yeah.
Anyone else has a further question?
One more from me. For the M3 oil field, right?
Yes.
May I know what's the progress and whether it is within schedule, and what's the expected completion date?
We are still executing the project, so we have some shift in the timeline. So I have to get back to you on that, because it's supposed to complete by early next year. Yeah.
Okay, thank you.
Okay, maybe we'll take a last 1 or 2 questions.
Hi, it's Homing here. Can you hear me?
Yep, go ahead.
Yes.
Hi, just to ask one more industry update question. with the inflation costs and everything that's also hitting the oil and gas services, right? Do you expect that PETRONAS in the upcoming activity outlook would they revise the size of the contracts to accommodate higher service costs generally like for, let's say, per contract? Yeah. Or would they maybe adjust by giving better tenders but at the same DCR?
It depends on the type of services we do. For example, MCM, that one is a tricky one because that one is a locked-in price for at least a minimum of 5 years. So that one we can't do much. We just have to suck it up and deliver the works for the next 5 years. That's for example. For things like MOPU and well services, these are most likely negotiable. We able to come back to them on certain things which were not in the contract before. For example, the COVID expenses and COVID implications are not expected for EPC projects such as the MOPU during the award. That we'll be able to, we are currently discussing with them whether they are able to assist us on some of the costs incurred due to COVID, especially COVID expenses such as the test kits, the quarantine period, and all that. These are expected from our side also. And for the IWS, it is a continuous improvisation from their side, because IWS is an umbrella contract. They are able to derive for every single work order they want to give out. They are able to change the contents of the tender. So that one would change according to the trend of the market, such as cost escalation and the type of technology that is exciting enough to be put into the tender, for example. Because IWS umbrella contract, this one goes for 5 + 2 years. This umbrella contract.
Understood. So maybe to say like,
yeah.
So mean to say like during the COVID situation, most of the service players have to incur the cost first, but negotiable and claim back the COVID expenses, right? And then in the current situation, inflation impact, which it could be the same thing where you have to incur the cost first, but it's also negotiable up to the point where you submit your claims and claim back from PETRONAS, whether they can allow to claim back the higher costs.
Yeah, because I mean, that is what the impression we were given, whether or not
The order book of 2.2 billion be realized. Will it be linear or skewed towards the later years, 2023 and 2024?
Okay, I mean, a chunk of the 2.2 billion is from the MOPU, from the buy and MOPU. So that is you can say you can spread it across the 10 years. And the others are in the window of 3 to 5 years. Yeah. So that is how we spread it across the 10 years. So 2.2 billion is essentially for the next 10 years.
Okay. What about your typical replenishment of your order book? How does it look like usually?
Okay, so obviously, just relying on what we have now, it's going to be 2.2 billion and 2.2 billion, and that's it. But we are looking at year-on-year replenishment, year-on-year award securement new projects that we expect to come into our way. I would say 20% minimum replenishment every year.
Okay, and this will be both asset heavy and asset light model, right?
Yes, due to the type of services we do, asset heavy will be something like another MOPU project, and asset light and services will be things like MCM, IWS, and offshore construction services.
Okay, great. I think there is no more questions for now.
Okay.
Yep. Okay. I think thank you, Kajun, for the presentation. All right. To everyone else, if you have further questions, please feel free to reach out to us at Image Jiwa Communications on behalf of T7 and Bursa Malaysia. Thank you for attending today's briefing. Stay safe, and we'll catch you soon in the next briefing. Thank you.
Thank you very much.